Hello everyone, this is Dr. Mihir Shah once again with another video. This is the third part of our university question paper solving of October 2019 of the subject Goods and Service Tax, also known as the indirect tax for TYBMS Sem 6. We have already covered up two videos in which we have solved question number 2 and question number 3. Now, in this video, we are going to solve question number 4 of this paper. Now, in this question number 4, there are three questions, one carrying 15 marks, in the other carrying 7 and 8 marks each. Okay. So, let us see which are the questions that we need to solve and how to solve them. Now, question number 4A states that Mr. Govind Patil is a registered dealer in the state of Maharashtra. So, I'm just marking down Maharashtra. Under GST provides the following information about his business for the month of November. Compute his net tax liability of Mr. Govind for the month of November. Whenever they tell you to find net tax liability, remember the steps. You need to first find tax on supply, then ITC, and then net tax liability. Now, in the question, they are giving you the opening balance in electronic credit ledger and ITC. ITC is already given, so one step is reduced in the sum. So we need to find the tax on supply and then we need to find the net tax liability. Tax on supply meaning all these supplies. They are giving you various supplies. So on this, we'll have to find the value of tax. Now remember, if you are selling in the same state, your GST will become half, and will get split in CGST and SGST. If you are supplying it to different states, then directly it will be taken as IGST. Okay. So based on that, step number 1, calculation of tax on supply. We'll have particulars, calculation, IGST, CGST, and SGST. First, sold goods to customer in Pune. Pune comes under Maharashtra, same state. So this 18% GST will be taken as 9% half of 2,02,500. So 2,02,500 into 9%, half goes in CGST, the other half goes in SGST. Next, sold goods to customer in Shirdi, again a part of Maharashtra. 18% gets split in 9% each of 4,50,000. So 4,50,000 into 9%, one goes in CGST, the other goes in SGST. Again, sold goods to Panvel, again a part of Maharashtra. So 12% ka half is 6%. 7,50,000 into 6%, half goes in CGST, the other half goes in SGST. Sold goods to customer in Surat. Surat is not in Maharashtra, different state. So the entire 5% on 6 lakhs will be taken in IGST. Bangalore, 18% on 10 lakh 50 directly in IGST. Virar, again part of Maharashtra, 6% each. So 6% goes in CGST, 6 goes in SGST. Last, Rajasthan, entire 5% will go in IGST. Once we do that, we just total it up. So we get total as 2,37,750 in IGST, 1,15,875 in CGST and SGST each. That is step number 1. Step number 2, we need to find ITC, but it's already given the question, so we ignore that. Step number 3, we'll start calculation of net tax liability. Now, net tax liability ka formula, always remember the format is first tax on supply less opening less ITC. Whatever balance if you get a positive balance, meaning it's a liability. If you get a negative balance, it means there is an excess credit available. You can adjust it. Okay. So using that format, okay, particulars, IGST, CGST, SGST, tax on supply, we take those values 2,37,750, 1,158,750, 1,158,750. From that, less opening balance in credit ledger 90, and less ITC 15, 1,20,000, 1,20,000. Subtracted, we got IGST as positive, so that's net liability. CGST and SGST became negative. It means there's an excess credit available. Now the rule is, if there is excess in CGST, SGST, you can use it to pay off IGST. If IGST is in excess, you can use it to pay off the other two. So what we do here is, since CGST is in excess, we are using first CGST to clear out IGST. So I'm writing less credit adjust to CGST toward IGST. So 94,125 got deducted from IGST. So your CGST became 0. IGST is now still positive 38,625, meaning still there is a liability. Okay. Now SGST is again negative, meaning you have already paid it more. Okay. Now this value is actually 94,125. Okay. So 94,125 was the basically the balance. So from that amount, you are paying out 38,625, which is still the balance of IGST in positive. So we are clearing out that also. So ITC becomes, I mean, IGST will become 0, CGST is also 0, and your SGST will be now, this is now 78,000, okay, it will be 55,500, okay. So this is not that value, this is the value which was taken here, but this is 94,125 was the balance. From there, 38,625 we subtracted, we get the value as 55,500, which is still negative. It means it is still in excess. So net tax payable for IGST is 0, CGST is 0, and SGST is the excess credit available of 55,500. Okay, so this was the first sum under this paper. Very simple. You just have to calculate the tax and then put into the format. Now let us see what was the next question in this paper. Question number, this is 4A. This is 4P, okay. There was a misprint in that question paper, 4P. Okay, Messrs. Robert Industry provides you with the following information for the month of December. Calculate aggregate turnover. Remember, aggregate turnover meaning anything which is related to supply, whether taxable supply, tax-free supply, exempted supply, export, goods, service, anything which you are supplying, the total of that is nothing but the aggregate turnover. So let us check what all can come. Intrastate goods. So now this is intrastate goods taxable. So it is a supply. Yes, it will be considered. Intrastate goods taxable. Again, it will be considered. Interstate service will be considered. Export of goods will be considered. Export of goods considered. Value of inward supply. Inward means purchase cannot come. Supply of exempt. Yes. Supply of exempt. Yes. So all the tick mark will appear in the total. Now the word is inclusive. Inclusive meaning that particular amount. 20. Like take the example of the first one. 23,60,000. It includes the tax of 18%. So can I say if I take the base as 100, I can say 18% is extra in it, so it is 118. So 100 is how much? Okay, 100 is how much? That is what we need to find. So we are going to cross multiply and get those values. So whenever you have the word inclusive, it will always be cross multiplication. Okay. So let us see how to get it. So for interest rate good taxable at 18%, the rule would have been 23,60,000. Okay, 23,60,000 into 100 divided by 1,18,000. So 23,60,000 into 100 divided by 118, you would get the value as 20 lakhs. Same way for next one, 5% inclusive. So 12,60,000 into 100 divided by 105. Because 105 meaning that 5 is extra. So this value would have got replaced as 105 and cross multiply, we get it as 12 lakhs. 5,60,000 has an inclusive of 12%. So 5,60,000 into 100 divided by 112, we get 5 lakhs. Export of goods to UK 2 lakhs. Export to Kenya 5 lakhs. Supply of exempt service 1,50,000. Supply of exempt goods 5 lakhs. And then just add it 20 plus 12 plus 5 plus 2 plus 5 plus 1.5 plus 5 lakh. Total comes to 50 lakh 50,000. So that's the value of aggregate turnover under GST, 50 lakh 50,000 for Messrs. Robert Industry. Very simple, just need to add up and get the totals. You just have to be careful for inclusive, you have to cross multiply and get the values. Okay, so this was question number 4P. Next, 4Q, the last question of the question paper. Messrs. Steve Archer Limited, being a manufacturer of TV, has 5 factories in Panvel, Palghar, Virar, Andheri, Kalyan. Is Messrs. Steve Archer eligible for composition levy in the current year? Okay, now in order to find compensation scheme or compensation levy, the person is from Panvel, he is having his stuff in Panvel, Palghar, Viranderi, Kalyan. So that's in Maharashtra basically. Now the rule is the composition levy ke liye, if the aggregate turnover is less than 1.5 crore, because it comes under Maharashtra and Maharashtra ka threshold limit is 1.5 crore. If the aggregate turnover is less than 1.5 crore, then they will be eligible to apply for the particular scheme. Now again, previous year turnover in lakhs, including, now again this is inclusive of tax, so again we'll have to cross multiply. So what we do here is, first we note down all those particulars: Panvel, Palghar, Virar, Andheri, Kalyan, 60, 28, 12, 8, 12.1. We add up, we got the total as 112.1 lakh. Now this includes GST, so we're going to remove it out. So 112.1 into 100 divided by 180 because 18% GST. We got the value as 95. So that's nothing but 95 lakhs because in lakhs. So now it's given that measure Steve Archer. So we'll write here. So this is not Kunal. This is Steve. So we'll write here Steve Archer's aggregate turnover is 95 lakhs, which is less than the threshold limit of 1.5 crores. Therefore, he is eligible to opt for the composition scheme. If it goes beyond 1.5, you wouldn't have, but since it is less than 1.5, they are eligible. And if they are eligible, like if they are asked to, you should also find the value of tax. Okay, it will be easy. It will be better. So calculation of tax liability under composition scheme. Okay, very simple. 95 lakhs was the aggregate turnover. So on 95 lakhs, 0.5. See, manufacturer ka composition scheme mein the rate is 1%, so it gets half under CGST and under SGST. So 95 lakh into 0.5 comes to 47,500 CGST, SGST, the total of that is 95,000. Okay, so this is how you'll have to solve the sum based on composition levy. Chalo. I hope everyone have understood that. With that, we will be ending this video here. Thank you.